All right, guys. So as you can see here, we pretty much. I'm not buying any more challenges. Yeah, it's my last one. All right, and I'm gonna show you guys the last trade we took on this 5K account before you. It was a gamble, I won't lie, and I gotta hold myself accountable. I'm not gonna judge myself for it, but I'm gonna just reflect, ask myself, why did you do this? And I'm not gonna trade. I'm not gonna buy any more challenges until I either pass or fail the ones that I have. So let me show you guys the trade, and you no further waiting. So this is the trade I was watching right now on USD CAD, and this is not the trade we took. I don't know why I took a trade in the first place. I should have followed my time element model. So here on the weekly time frame, we have what sell side liquidity down here resting. We have a weekly sell side balance. We're in 4-hour time frame. This is where the trade came in. We had an inversion fair value gap there formed perfectly. Inverse fair value gap, that told me what? We are having that change in the state of delivery. We retrace back into it, and then eventually I think we actually did, we hit it once, and then we started dropping. So on the 15-minute time frame, I know you gotta ignore this, guys, I won't lie. On the 15-minute time frame, I had a inversion fair value gap, which was my entry. Another inverse came down, we entered multiple times, but then eventually this was our stop loss, and we ran right through this high. But again, it wasn't fitting my time criteria. It was during New York lunch, which is something I don't ever trade. And the PM session too. This is PM session mainly for indices, but even then, this pair GPB is for London session. NZD is basically Asia session. So I was trading this completely wrong. And let me show you how many positions I got into. So yeah, we got into 1, 0.8 lot, 2, 3, 4, 5, 6. 6 of them. 0.6, 0.6, 0.6, 0.8, 0.8, 0.8, and it was one-click trading. Again, we were around here just near 2% drawdown, and then eventually today we brought it down all the way to 10%, just using that trade, not following our model, not even sticking to a trade, which is or market, which we need to trade. Pretty much here we have the 10K challenge left. This is one of them. We have this challenge left, and then we have this challenge left, 15K. Again, I'm going to play a little bit more aggressive with these because I already have my model. It's really just sticking to the frameworks of it and then just trading it using time elements, sticking to the key elements. I'm going to not trade the markets like these right here, these exotics. I'm not going to trade them anymore. I'm going to be watching them, basically using them for the main ones I'm going to focus on are these up here, this section, and then eventually after it becomes crypto, I'm going to take $3. We had a 1 minute market structure shift, so on balance, we tapped up into it. This high up here, our entry. This could have been our entry. We moved our stop loss up here or right here, this high. That's one PD array. This is going to be the second PD array, and then this order block is a third PD array. So pretty much here we have is the NQ trade we took today on Friday, the January 26th. I did up to you guys about the 5K. I know we went through some damage around that one. And then on the 10K, we were down 1%, but today we made basically 2% on one trade, and I don't plan on trading any further because it's Friday, and I'd rather just wait till next week. Next week is NFP week. Monday, high probability day, and then Friday, it's after the news, of course, the best probability to play it out. And of course, majority of the move has already happened. So for ES, not even for ES, for Dow Jones, I saw we were rallying up, and I saw we didn't have a SIBI though, but we were rallying up on Dow Jones, so I thought ES was up here, NQ was down here. So, it was down here. I bought the buys and I caught it up here and I sold because ES was starting to reject off. And I was like, all right, we're not going to close there. We got a couple more minutes and we're still inside of this sell side balance. We're going to close. We're not going to make it inverse yet. So I sold. And that's kind of why you see these two positions here. They were both, of course, one was a big winner. One was just a little win with just a break-even trade, basically. And then after that, we waited for the closure, and that's what we got here. We saw ES was closing up way above it, and then NQ was catching up. So I bought some right here, and I didn't wait for the closure because of Six Sister. Six Sister was telling me that ES was going to the moon. This Dow Jones right here was going to the moon, bouncing off the BISI, and I knew ES was going to make this inverse. It was like 3 minutes left, and we're all the way up here already. We're waking back down, we're coming back up, we're waking up. To me, that it's high confluence. We're going to continue higher, and this one was still yet to go up there, so I was buying. And of course, I sold a little bit short, and the main reason why is because if we zoom out and go to the 4-hour time frame here, you can see ES is already breaking these highs, while NQ is still yet to do that. So again, more Six Sister approach. Dow Jones again too is breaking those highs. that you can see there. And so NQ is really lagging behind. And that's kind of why I favored NQ today, because it's the one that's catching up. And, there were high probability trades right here. We entered, we cut some around break even, not break even, but like a couple of candles up above. And then we let some run right here. We cut some, then we cut some right there. Nonetheless, I should have let it run to the high. Again, that's one thing I'm working on, is not cutting the position when we're barely enter or when we're barely moving. I do get a little bit, I've been reviewing it and I have been working upon it, is where like I cut the position when I soon enter and it's not moving as fast as I like, or I don't know, we just aren't going in, to the upside as fast as I want. But again, these are 1 minute candles. They're printing pretty quickly. So I think I just need to build a little bit more patience and I already have trust with the model. I trust the model. Again, here on the model, it was presented on the 4-hour time frame. We had a buy side imbalance. 50-minute time frame, we had that 6-star approach. We had buy side liquidity up here resting on the 1 hour. But on the 50-minute, we waited for that change in steady delivery, even though it was on ES, not NQ, but they're correlated markets. So one of my key elements is 6-star or SMT, and that's kind of what I was using here to bring me more correlation and more trust with the model or with the setup presenting itself. And of course, I didn't wait for a 1 minute confluence to come back and tap back into this, but I think we would have as soon as we end right here, this candle right here, 1 minute time frame, you can see we opened up, we went down, then we went higher. That could have been my confluence. I don't even need a change in the steady delivery or a buy side imbalance to be hit, because right here, what is this right here? Buy side imbalance, we came down, we tapped up into it. Even then, we're close to the buy side draw liquidity here, change in steady delivery. I don't see us coming back down, because ES is just rallying higher and is bound to take that out right here, this high, while this one wasn't still yet to do it. But nonetheless, we waited for that. And then eventually here, these highs, of course, we never got to them, but right here is where I entered the trade majority, and I cut majority right here. Should have just let it run. And then eventually scaled out as soon as we were in there and that profit up there. So just letting it run more, that's something I'm going to start working on. Can't see me, but here is the funded account. I know my room is pretty dark, but I'm going to leave it like this until I probably get an Elgato ring light, until I pass the funded account, get a payout, buy equipment. All right, so there. Profit 1.1%. We're up now. For the month, we were down again. Just taking bad trades on the 10K, and we weren't following our model. That's kind of why I wasn't passing these funded accounts today. 2%, I'll take it. I'll take 2%. If I get, 4%, risking 2%, another day, I'll take it again too. Or if I get 6%, I'll take it, or 8%, I'll take it. I'll take 8% here from now on, If I risk 2% and I hit a 1 to 4, that's 8%. Profit from challenge, $600. That's it. Basically $700. Do with the commissions and spreads. So profit factor pretty good. Win rate is half basically, because average trades 1 trade per day. Now I want to keep it like that. Total trades taken 9. Number of days 4. That's good. Trade lots 5. Again, I'm not buying any more prop firms until I blow the 10K or the 15. Either one of the two. Friday the 2nd, and today there were so many trade setups that I could have taken, but my model didn't present itself. So today I'm gonna show you guys what trades I'm talking about, and I'm gonna give you guys a brief little overview here. Let me load up OBS though, but here I'm gonna show you guys on one chart, and these were all on NQ, somewhere on Dow Jones. And I'm gonna show you guys the trades I took today and how we went from losing to winning, but not following our model, and what I plan on doing actually with the model I have, and how I actually want to trade going forward. So if I go to show you guys on the 15-minute time frame here, today we traded pretty much all this right here, NFP dropping, and then eventually on the 1 minute, we had multiple trade ideas during the lunch window. But I told myself I'm not going to trade this during lunch. First one was right here for, I think, Dow Jones. I called this all out on the Discord. I have photos, I have proof. And the main reason we lost these is because I saw an SMT, but I didn't have any PDRAs, and I was just like waking up, getting out of bed around this time. I know, very, very undisciplined. Not even opening up the charts on the computer, just looking at it on the phone. One eye open, and I was like, all right, hold on, this looks good. I bought, stopped below. As soon as we kept going lower, I bought a little bit more, and then I was like, all right, hold on, wait, this is getting scary. So I'm gonna move my stop loss right into this low. Can't open, wicked out, and we went up higher. Saw the inverse though. Closed above on my chart here on the phone. I opened it, and then I opened a position here as soon as we closed above, and then eventually I ran it up to this take profit. I know the standard deviation projections were telling me 2.5, 4. Here again, I was just barely waking up. I saw that we lost around, I think 2% on this one right here. Yeah, we lost around 2%, and then eventually I was like, all right, hold on, I'm making 3% right here. So I just took it. So I'm just basically up break even. But then here I was like, all right, hold on, let me just scalp, bro, because I was feeling myself. I won't lie. I was feeling myself on the phone. I'm not even gonna lie to you. I don't know what it was with me on the phone in the bed, bro. Just scalping. My trading model revolves around 3 different time frames, 3 different PDA rates that have the most. But here scalping, you don't really need those 3 PDA rates as long as you know where order flow is going, and you use the 3 PDA rate rule to give you more confirmation, and using standard deviation projections to see where the market is likely to go to that 2 and the 2.5. So I'm really just debating on how I should be trading. I want to intraday scalp and I want to like get these quick meaty moves, but at the same time I want to follow my model and have that A plus setup present itself. So I think I'm gonna make a different model. I'm gonna really brainstorm this weekend over it because today's Friday again, and I'm gonna brainstorm over it. But now I'm gonna show you guys the funded account. All right, so you can see here pretty much we have the funded account. We're pretty much up 1.5%, and if you look just above that, we have a commonplace book. We're having a rough draft right now, and that's kind of why I've been AFK recently. I've been reading a lot more, but the current book I'm reading right now, I want to finish it and probably by, I don't know, I want to finish this. I started reading it yesterday. I want to finish it by like 2 days. I want to read 50 pages a day. It's essentialism. Again, just getting rid of what is not essential, and what is not essential is reviewing the notes in a not of a structured manner. I'm not reviewing it in a structured manner. So what I mean by that is I have the 22 mentorship here, have the 22 mentorship here, have the core content months here, but they all talk about what time, price, PDA rates, certain setups, certain models. They all are, organized in those models and stuff, and they're all like scattered all over the place in my Notion. I don't like that. So I told myself, how can I review the notes better and like actually remember majority of the stuff? And I told myself, a commonplace book can be the ideas of others and yours, quotes, certain things structured in a structured manner, and that's what I'm doing recently. I'm not going to release this book. I'm not going to do anything. It's personal. It's for me. It's my notes. I'm not going to put it out in the public. I'm not going to do any of that because I put in this work. I put it in my own words. Majority of y'all won't understand it. And I'm going to show you guys what happened today. So this is all during February 2nd right here at 8:30 my time, 9:30 pretty much New York time. But again, here we entered and then we lost. So this was around 2%. Again, I entered more as soon as we're going down. I was like, all right, hold on. This scared me. And then eventually right here, the trade I cut early, 300. Again, we're risking a good amount. I won't lie. This is around like 2% risk with a really tight stop on these right here. And then this one right here was again 2% risk with a really tight stop at that low. That's kind of why I like using the lower time frames, because you get really you put more risk on, but with less of a bigger stop loss. So you're able to manage the trade more efficiently, and you're able to more narrow the risk down, but also bring it up at the same time while having that. And then eventually here we scalped that last trade right there, hit the high, $69 again, 2% risk, 2% risk, bro, on these trades. And this scalp too, 2%, bro, 2%. This one I didn't know I entered so low, but I think I would have cut it either way. It was a very small scalp, we went up and I was like, all right, hold on, let me cut it. I don't know if the trade is going to work out, and eventually did hit break even, structured manner on the higher time frame. I always do my analysis on the higher time frame, and that's something that gives me more bias. And that's something I think I want to go into whenever I'm, intraday trading, is only having higher time frame bias, and then eventually I use my daily bias, and then I go in the lower time frames and I trade. I don't need every PDA rate to align together, because it won't majority of the times, and that's why the model presents itself once a week. But when it does, it's very high probability. I will probably trade that model, but I probably will make another one for when I intraday scalp, like I was doing earlier. Majority that daily power 3, because if you know how that daily power 3 is forming, or you're aligning yourself with it, and then the weekly power 3. The market is bullish. Indices are bullish. We're going to the moon. Why wouldn't you want to be taking longs and just like holding them? It makes no sense. You're gonna let the investment compound. Don't interrupt it. So hold that trade. That's something I should have worked on today. Would have probably passed, but nonetheless, I take this as more of a learning experience. Pretty much making this video to update you guys in the journey of becoming a trader, in my opinion. The book I'm currently reading, I did finish Essentialism. I think I did show you guys what I was doing with that. Now I'm reading The Compound Effect by Darren, and it's a really good book. Very small and condensed, but it's about the quality, not the quantity. I always remember that. So I finished chapter 1 last night. I did the summary, but I didn't take notes. But we're not here for that. I had to get that off the way. So I'm gonna show you guys the funded accounts and the trades I took, and I'm gonna do a top down, basically from like the most important trades, and then just like which trade I passed the funded account with, and like how much it made me. So it's a big milestone. I'm gonna pull it up right now. All right, so I have the funded account here, but we have the funded account here pretty much, and what we see here is we have met the 1600 target. The target was around, I think, 16,200. So 16,200 was the target, but I went a little bit over. And as you can see here, we took a trade on Dow Jones and we made $600. And then eventually we made, before that though, on the 7th, we made 100 and 66. And then again, before that, on the 7th again, we made 194. So, and then on the 7th, on the 5th, we made 112. And we were already up on the account because of another trade down around here. So here we made around, right here, this day, this is $200 basically. Another 100, so that's 300. And that's right here, basically around like 400. And this is like 600. So if you combine that in total, that is around, I really don't know. I would suggest around like 1,000 to 1,100. And we were already up on the funded account, like, you know, a couple of like $150. We didn't trade that before. And then as recently, you know, as we started to see, it was all the way from the 12th of December, we never traded it. All the way until February, we started trading it. And that's when we passed it pretty much. So this $600 was like the most impactful trade in my opinion. It was the biggest trade, best trade right there. Worst trade was 127. So that just goes to show, you know, the risk to reward is very important and how you use your trades. But again, I don't take too many trades. We only took 26 trades on this one, while on the funded next account here, you can see we have pretty much, we are up 4%. You can see what we took too many trades today, and then we went up and we hit a big one. And for that funded next account, we never ever took that many trades. You can see it was only one trade on the 9th, while the other one, while the 10K here, we took multiple trades. Today. Look, on the I'm going to show you guys what I went through for the Dow Jones trade here, and in order to, you know, pass this funded account. So what I saw from Dow Jones here, 4-hour BISI rejection block, we hit that, we swept the rejection block, and that's where I took my trade. I took it as soon as, you know, we had to change in the state of delivery, and then we went back up, and then I took my profit around here. So we go down to the 1 hour time frame. We have a 1 hour SIBI. That was a key area for us to tap into and then drop, and that's where we were taking our profits in. And on the 15-minute time frame, this is where we took the trade. I'm gonna show you guys on the Discord too, because I posted it on the Discord. This is where we took the trade from that inversion fair value gap. I usually trade inversion fair value gaps if we have a sweep. So we swept all this, and Dow Jones did this yesterday. I was thinking about this. I was like, man, Dow Jones did this yesterday. It's gonna do it again today. So that's instantly in my head. I thought, you know, like Dow Jones is the lagging one from NQ and ES. It's always just, it drops in the morning. Like the past 2 days, the past day here, it dropped. I would have took the short, but I took it on ES. ES looked favorable to me. I took it on ES, and you saw that I won on the 10K. But on the 15K, I wanted high probability. I didn't, you know, since we're bullish, you know, the 4 hours bullish, the 1 hour is bullish. Why am I going to take shorts? It makes sense to me. What I did here was waited for this. And as soon as we got that, I dropped down to the 5-minute. I was about to type it in, but we dropped down to the 5-minute here. And you can see we had a 5-minute BISI right here. We have a 5-minute BISI right there. And then eventually we have an inversion fair value gap right here, aligning perfectly. So what did I do? I took the trade. As soon as we tapped right back into that area, I took the trade. Stop loss, my original stop loss was at the 15-minute low. Rejection block, not the low. Down here, this would have been the low, but I had it at the rejection block. Main reason why was this, I don't want to see it come even near this. We were eventually made a balanced price range, in my opinion. I would have liked if we would have tapped once more and then rallied and had speedy delivery, but we didn't have that. And then eventually our take profit was at a 1-minute confluence. It was at a 1-minute prominent high. And again, right here, this 1-minute prominent high, to me, that's where my main take profit was. You can see this trade was a pretty long trade. If I use the time duration here, it was around here I entered. I'm fully transparent. Right here I exited. So 2 hours and 3 minutes. That is a very long trade. I did hold this one, and I didn't use any 1-minute confluences to move my stop loss, because if I did, I would have got stopped out. And the main reason why is because I entered on the 5-minute. If I entered on the 5-minute, I'm not going to use any 1-minute confluences to move my stop. I'm going to use 5-minute or 15-minute confluences. So whenever I was in profit around above this 15 minutes right here, changing the state of delivery, that's when I move my stop loss. As soon as we closed above right here, I moved my stop loss to break even. I was like, all right, we shouldn't revisit this area anymore. This should be left as a BPR or a breakaway gap. Changing the state of delivery occurred. We should now reach for buy side liquidity. The other indices or the other markets, other indexes we're moving to buy side liquidity, and we usually move that pretty quickly, and we got that here. We moved pretty quickly, and we took out that buy side, and then as soon as we took out that 1 minute prominent high, then we dropped. Pretty much show you guys on the Discord what trades I've taken. If you're not in the Discord, I won't lie, I don't alert them. Main reason why is I'm not gonna spoon feed. ICT always said I'm not gonna spoon feed you the trades. Here I'm just showing my results. That's all I'm doing. I'm showing the trades I've taken, proof of concepts that they work. My strategy works. My edge is there, is present, and just being transparent. When I lose, I show it. When I win, I show it. Pretty much. Or where is it? When I win. Where's my loss? I had another loss on NQ one day. Right here. So we were scalping, and then we lost right here. You see that? We lost twice. Doom. Stopped out. Then we won. Just a break-even day. Sometimes we have break-even. Sometimes we lose. Sometimes we win. It's both sided. See, we got break-even here again. So I recently started showing the MT charts because it's just easier. It's proof. I executed. I'm going to show you where my entry was, where my exit was, how I managed the trade. Of course, I'm not showing like the initial win because there's no point in showing that. I'll show you the trade. You don't need to see the P&L. The P&L, don't ever focus on the P&L. That's what I try to tell a lot of people. Focus on what price action. Price action is key. Price action is what makes the P&L. If you're always focused on the P&L, you'll never actually be focused on trade or the concepts, the proof of concepts. It can get very bad, like you can get very greedy, or that's something, a lot of people deal with, the greed, or they get fearful, they're up this much, I don't want to lose it, and it's a bad habit if you just focus on P&L. I never focus on P&L. I always focus on the price action no matter what. I'm always seeing where my drawn liquidity is being reached, what time, how did it get there, what speed, what PDR rates, what time frames did it, show me what, and all this other stuff, so yeah, no, this is pretty much the trade that passed us that account. And then this is another trader here that we had that morning. So we had a change. We didn't really have a change in the state of delivery. I won't even lie to you. I took it because Dow Jones was just moving. I was like, all right, ES is going to catch up. Swept these lows, 4 hour. It was inside of a 4 hour BISI. 15-minute lows swept. We reversed right back. How much more precise do you want me to get? You know what I'm saying? And then we lost 0.5 on Dow Jones the other day. It was dropping. And then eventually had that market maker buy model. And that's what happened here for this last trade. I realized that, we're dropping. This is the same as the other day. We're dropping. Other ones were just going up to the moon. This one was dropping, changing the state of delivery. Waited for that to happen. We entered. Pretty simple trading the indices right now. Very, very simple since we're making all-time highs. It's very easy in my opinion. And they move with really, really good speed. So I think they're very viable, especially with no news throughout that whole week. It was very, very, very juicy, very easy to win trades, So we got CPI coming up this week. It's currently the 11th. I'm about to start charting, better review the trades once more. And yeah, no, that's pretty much really it.